Hello, and welcome to the Riverside Superior Court Family Law Workshop series on the Mandatory Settlement Conference. This is Part 2, Mandatory Disclosures, and it is presented to you by the Riverside Superior Court Self-Help Center. My name is Patty Rich. Before we begin, I'd like you to please read the disclosure on the screen. This disclosure tells you that while all of our staff members are legal professionals, we are not your attorney. We cannot give you legal advice, nor can we give you strategy on your case. If you require legal advice or strategy, we do suggest that you hire your own personal attorney. The family law mandatory disclosures are controlled by the Family Code beginning at Section 2103. They consist of 4 separate documents: the property declarations, income and expense declaration, the declaration of disclosure, and the declaration of service of declaration of disclosure. The preliminary disclosures are mandatory. They must be done before any judgment can be entered by settlement or trial. While the final disclosures are waivable, at this stage when preparing for a settlement conference, it is necessary for you to complete the final disclosures in order to provide the necessary information to the court and the other party in order to make the settlement conference meaningful. When you did your original disclosures, you probably did the Family Law Form FL 142, which is Schedule of Assets and Debts, or the Family Law Form FL 160, which are the property declarations, which we'll be reviewing today. You probably also did the Income and Expense Declaration, the FL 150. Things may have changed since you filed your original paperwork, or they may still be the same. But we do need to have new paperwork submitted in order to ensure that we have the most current information prior to your hearing. Why do you have to do this paperwork again? Well, you may have already done your preliminary disclosures. If you did the FL 142, Schedule of Assets and Debts, that has a different purpose than the FL 160, Property Declarations. The purpose of the FL 142, Schedule of Assets and Debts, is to list the property and identify it as separate or community. The purpose of the Property Declarations, however, is not only to list the property, but to show how you propose to divide that property at either settlement or trial. With regard to the Income and Expense Declaration, if your Income and Expense Declaration is more than 3 months old, you need to provide a new one before the hearing. The court wants to see current pay stubs and also to ensure that all of the information in the FL 150 Income and Expense Declaration is correct. We'll first talk about the property declarations, or the FL 160s. There are 2 property declarations in your packet. They include the community property and the separate property declarations. They're used to show the court how you propose to split the assets and debts at time of settlement conference or trial. When filling out these forms, it's important for you to understand if you're going to a settlement conference or trial, because the purpose of the forms is different for either hearing. For trial, you want to make a proposal to split the community property as even as possible, because when going to trial, the court has no option but to divide the assets and debts of the marriage or community property evenly. If you propose an even distribution, the court may accept that distribution. For the mandatory settlement conference, you're going to just be submitting what you want. Keep in mind, however, that if it is a completely unfair distribution, the other party may not go for it, and you may end up having to go to trial. When filling out your property declarations, you'll first want to go to the original disclosure documents that you filed. The screen shows the FL 142, which is the Schedule of Assets and Debts, which we use in our petition and response packets. You'd use that initial form as a checklist and make sure that everything you put on the initial form is now included in the community and separate property declarations. As you can see on the screen, we have a house listed, which was community property. So it goes on the community property declaration. We have property in Florida, which is separate property. So that will go on the separate property declaration. And finally, we have furniture, which is community property, and it appears on the community property declaration. When looking at these forms, you'll see that the schedule of assets and debts identifies the property, provides the fair market value and any encumbrances or loans on that property. The community property and separate property declarations do the same thing, but they go further because, well, it identifies the items in column A, identifies what the gross fair market value is in column C, and the debt is in column D. Column E provides for a net fair market value, and they even provide you with the equation, which is C minus D equals E. It is that net fair market value that will be placed under the distribution columns at F. For a settlement conference, you're going to put whatever you propose with regard to the community property and separate property. For the trial, you want to have a substantial equal division of the assets and debts, or an understanding that you may have to do a buyout if there is not an equal distribution. When completing these forms, you'll want to make sure that you include the totals of both the assets and the debts, and then also include a grand total on the bottom of the form before your signature line, so that the court and the parties can see the overall results of the distribution and how even or uneven it might be. With regard to your separate property, that doesn't matter because separate property is separate. When my ex and I got divorced, he left the house with his 69 Camaro worth $30,000. I left the house with my student loans worth $100,000. It didn't really matter that that was uneven because that is separate property. So let's go ahead and take a look at the form. We're going to be utilizing the mandatory settlement conference form that is available online. This is the complete packet for the mandatory settlement conference and trial. If all you need to do are your disclosures, we also have a packet that deals specifically with the financial disclosures, and you may want to access that instead of utilizing this mandatory settlement conference packet. The first page is your instructions on what you need to do with the forms that you complete. And we'll be discussing these instructions in our next session. The next page is our intake page. Everything on this intake page will be self-populated throughout the remainder of the forms, so that you only have to input the petitioner's information, the caption information, date of marriage, date of separation, date of service, case number, and children's information once. Once that is all done, and you've put in a date, all that information will appear in the forms. So as you can see here, this is our community property declaration. It has the caption all done, and it also has the signature line and date for the signature line completed. Now, when filling out these forms, what I suggest you use is the FL 100 and the FL 142 that you filed originally. So that might be the FL 142, or you may have done prior property declarations. But the packet I'm showing you right now is our court's self-populating dissolution packet. On this form, there are categories, and everything that's on this form should then be transferred to the mandatory settlement conference packet. So if we have on the original petition, and we're going to give a couple examples. Sorry, typing's not so good today. So I just threw in some information. I'm going to then complete the other information for each thing, so bear with me for just a moment. Oops. So as you can see, the separate property is identified under the separate property column by either putting an R or P, R for respondent, P for petitioner. The date acquired, when filling out the MSC packet, rather than using an actual date, I use these words, and they include DUR-MAR for during marriage, AFT-SEP for after separation for separate property, BEF-MAR for before marriage, separate property, gift, and inheritance. By using these words, you're letting the court and the other party know why you think an item is either community property or separate property. We then put in the value and how much is owed against it. So this information is already set forth in your original paperwork. When completing your property declarations at this time, now I've just jumped to the MSC packet, you will be putting as real estate values the current value, because the real estate is valued at the time of judgment. Everything else is valued at the time of separation. So the furniture, the jewelry, the cars, all of that will appear with numbers that relate back to the date of separation. So the first thing we had on our divorce was the 1313 Harbor Boulevard property. And that was acquired DUR-MAR, which everything on the community property declaration would be. And then what is it presently worth? And how do you propose to divide it? Are you going to sell it, split the equity? Is one person going to get the property and then have to either equalize with other property or do a buyout? These are all set forth in this property declaration. Now, if you recall from my example, we had furniture, we just put miscellaneous furniture, and that was also community property. That was obtained during the marriage. And I believe we had a value here. And did you all already take what you wanted and it was a pretty even distribution? Go ahead and put that in. We had jewelry, but it was separate property, so we'll do that on the next form. And we had two vehicles. We had the 2010 called Windstar, which was during the marriage. And who gets that vehicle, you're just going to identify that under either the petitioner or respondent category. Now, we also had separate property. So I'm going to jump to the separate property declaration, and that's right here. And we have real property. This was an inheritance, so we're going to put that down here to identify why we think it's separate property. How much is it now worth? And whose is it? And I believe I designated it as the respondents. So that goes to who will ultimately get that property. We had no furniture, so make sure you check that none box for anything you don't have something of. Jewelry, we had wife's jewelry, personal effects, and that was during the marriage. Oh, sorry, it wasn't during the marriage. That was a gift. And we would be putting that, just putting in the value there and whose property that is. We'll make the wife the petitioner, so we'll put that there. And then we had, lastly, the 1969 Chevy Camaro. Excuse me, which is obtained before the marriage. It had a value of $30,000. And that was respondents. So that's essentially how you will be using the original paperwork as your initial checklist and completing both the separate and the community property declarations. You will need to go through all of the categories. If there is something to be listed, you'll list it. If there's not, you will just check the box for the none, which is underneath the category, or if you feel more comfortable, just handwriting in the word none. Then you will go through and add any additional information that you have since learned of since the original filing. If there isn't anything more, that's fine. But if you did find out that there was a bank account you were unaware of, or you forgot to include your retirement, well, those things will now be included in these updated forms. So those are the property declarations. Let's quickly go through the various categories. Real estate is home or land. Household furniture is what you had during the home. It's fairly self-explanatory, but it's valued at what you could sell it at, not what you bought it for. Jewelry is usually a gift, but if it's not, if you purchased it for yourself, then it would go on the community property declaration. Vehicles, boats, and trailers, self-explanatory. Have on the data separation. Even if it no longer exists, you're still going to want to list it and then identify who took control of it, sold it, totaled it, whatever the case may be. Checking and savings accounts, you don't want to put in a complete account number because this is going to be a public record, but you can put in Chase Bank, ending, and then put the last three numbers of the account so that it's clear to the other party what account you're talking about. And that would be for your savings, your checking, and your credit union account. Cash is a squirrel fund, your vacation fund, your education fund, things like that. It's not really the $20 you had in your wallet. Tax refund, you may have listed it on your original paperwork. Probably not going to be listing it now unless you are still filing, married filing together. Then there may be an issue with regard to a tax refund. Life insurance, whole life insurance, not term. Whole life insurance has a value whether you live or die. Term life insurance only has a value as long as you're paying the premium and you have died with the current premium being paid. So we're not interested in the term policies. We're only interested in the whole life insurance policies. Stocks and bonds, I'm sure you know them. If you have them, you'll be identifying them under number 11. Retirements and pensions. These may have the characteristic of both a community and separate property asset or debt. Because as in my case, my ex-husband worked for Disneyland for 25 years. We were only married for 14 of those years. So he listed his retirement, if I could spell it right, on the separate property as before marriage, and then identified what was earned prior to the time that we got married. And then on the community property declaration, he listed his retirement that was earned during the marriage. The only part of the retirement that's going to be considered for purposes of community property is that which was earned during the marriage. I wouldn't be entitled to half of all 25 years because we were only married for 14 of those years. Profit sharing IRAs are the same thing. Accounts receivable, unsecured notes. An unsecured note would be a loan you made to a third party and you expect them to pay it back. That would be an asset, and it's unsecured because there's no property that you can take over if they don't pay the note. Partnerships, sole proprietorships are at 15. What is the value of all of the fixtures and inventory and goodwill of the business? Other assets, anything you couldn't find a place for can go here. If you need additional room, you would do a continuation sheet, and that is the FL 161. You'll then total, most importantly, column F, which is the distribution to the petitioner and the respondent. You'll then go to the debt section, and we have our student loans, which are generally separate property. Any back taxes that were incurred. So if you owe taxes from during the marriage, even if you filed married filing separately and the other party didn't file at all, it's still a community property debt, and it's still going to be collected from either of you from the IRS, whoever it's easiest to collect from, which is usually the person who files taxes and gets a refund because it gets intercepted. So you might want to keep that in mind when it comes to who's going to be paying these back taxes. Support arrearages are generally separate property because they relate to third parties or other cases. Unsecured loans, you made a loan with a third party that's unsecured by any property, such as a payroll advance loan, cash call, a loan from your sister. These are unsecured by real or personal property. Credit cards, if you had a balance at the time of separation, that would be community property. If you have new credit cards that had no balance at the time of separation, you don't necessarily need to list them now, but you're better having a complete list of everything than a partial list. So you could include those credit cards or the other party's credit cards on your separate property declaration. Other debts are any other debts that you may have had that didn't fit anywhere else, such as medical expenses incurred during the marriage or community property, things like that. Then, of course, you're going to, once again, total the columns for the distribution. And this is where I like to put the total, the grand total. So right under here, I'm going to put, and then I can put the numbers down of the assets minus the debts for both parties. So this better shows the other party and the court the full nature of the distribution that's being proposed. Then for both forms, you would then date and sign. And this concludes our review of the property declarations. We'll next look at the income and expense declaration, or the FL 150. This form, I'm sure you've done numerous times, so we're not going to spend a lot of time on it. We'll just briefly go through each of the categories. When looking at this form, some people get intimidated by it because it's 4 pages with a lot of information that is being sought, but it really is a very simple form because it's information about you. So if you take it section by section instead of looking at it as a 4-page document, It's not quite as intimidating. So let's take a look at the income and expense declaration that's in our MSC packet. The captions are done. Number 1 is employment. You're going to tell us where you're working, A through H, with 2 months worth of pay stubs. If you're not working, just let us know your most recent job and answer A through F. Number 2 is age and education. How old are you and what is your educational background and any vocational or professional licenses that you may have. Number 3, A, what was the last year you filed for taxes? B through D, how will you be filing for taxes in 2022? What is going to be your tax filing status? How many exemptions will you be claiming? Number 4, what is the other party's income? Right here next to specify. And then how do you know that that's their income? Just a 1-line explanation. They told you, you saw their pay stubs, they're still doing the same job they did while you were married. However way you have of knowing approximately what they're making. We then move on to page 2. Page 2 is the income from whatever source, 5, 6, and 7. They want to make sure that you attach any proof of that income for the last 2 months, whether that be a pay stub or disability statement, workers' comp statement. However way you're getting that income, you need to provide the documentation to support it. Number 5 is income from third parties. The list includes pretty much any place you could get your money from. So there's salaries and public assistance, pensions, disability, unemployment, workers' comp. Just find the place where you get your money from and then complete the lines adjacent thereto. So in this case, I only get a salary. So I'm putting down what I made last month and what I make every month as an average. It's the same, I'm done. You just need to go through now and figure out where you get your money from. 6 is investment income. So these would be your investments. Please note for rental property income, you want to make sure that it is your income, the rental income, less any of the expenses for the property. Income from self-employment, you're going to identify the type of business, the name of the business, and what the business does. Number 9, change of income. If you've had a change of income in the last 12 months, please let us know. You might have increased hours because the business is picking up since the COVID issues. You may have gotten a new job. You may have been laid off. Just let us know if something has changed in the last 12 months. Number 10, deductions. These are the only deductions the child support calculator will take into consideration when calculating support. So look at your pay stub to see if any of these deductions apply. They are required deductions, not voluntary deductions. So they include union dues, required retirement payments such as CalPERS, STRS, SB Sarah, there's FERS, STRS. Those are all mandatory governmental retirement programs. Medical, hospital, dental, and other health insurance premiums, child support that you pay by an order for other children, for other relationships, spousal support and partner support that are paid by court order. And then if you have necessary job-related expenses not reimbursed by your employer. Number 11 are the assets that you have. Primarily, they're assets that you have that you can sell to make ends meet. Because we'll be looking at page 2, what you have, the monies that you have coming in, and comparing it to page 3, which is the monies going out. Here you're going to identify who you're living with. Now, if you're renting a room from someone, you don't include them. But if you're living with someone, meaning you're not actually paying them a specific amount of rent every month, then you do need to include their names and information. You'll provide us with your estimated expenses. And basically, this is just your budget. So you'll identify all of these different items. So let's say you have rent. Your groceries are $400. you pay 120 in utilities, you have a cell phone, you pay for gas and insurance, and you have a car payment. As you can see, while I'm typing in these numbers, our self-populating program will automatically do the math. So again, it's very helpful to use this. If you do not make enough money to pay your bills, the court's looking, do you live with someone who's helping you pay the bills? Are you receiving child support or monies from other parties to help you pay your bills? So again, page 2 and page 3 are looked at to see how the numbers make sense. We then move on to page 4, which is child support information. If you do not have a minor child with the person you're divorcing, put a 0. Okay. If, however, you do, you tell us how many kids you have. How much time do they spend with you percentage-wise versus the other party? If you don't know what that percentage is, you could just type it in or handwrite it in. And then the court can determine what that timeshare would be. Do you or do you not have health insurance available to you through your job? It's not asking, do you actually pay for it? It's asking, does the job offer it? Because the law requires you to insure your children only if the health insurance is available at a reasonable cost through your employment or union affiliation. And that reasonable cost is defined as 5% of your gross income. So we want to know if it's being offered by your employer, and if it is, how much was it going to cost you? If it's not reasonable, the court isn't going to order that you maintain that insurance. Additional expenses for children in the case: childcare and healthcare not covered by insurance, which is your copays. Those shall be split equally between the parties unless the parties agree to something different. Travel expenses and educational or special needs, including your extracurricular activities, those may be split, so it's discretionary, but of course you can always agree to those terms as well. You'll be identifying if you have any of these monthly costs. Number 19 are hardships. This takes a little bit of money off the calculation of your net income when calculating support. The one we see the most is, I have minor children from other relationships who live with you. You'll identify the name and ages, how much you spend on them per month, if you receive any child support for those children, and how they create a hardship. So that concludes the income and expense declaration. So our next document that we're going to review is the Declaration of Disclosure. This document is super simple because it's already done for you. It identifies who you are, the petitioner or the respondent, and that this is your final disclosure. Then under attached are the following. It identifies your property declarations and your income and expense declaration. So on this form, all you really need to do is date and sign. The next form in our packet is going to be the Declaration Re Service of Declaration of Disclosure, or the FL 141. This is an informal proof of service showing that your final disclosures have been completed. You are unable to actually date and sign this document until after you have completed all of the documents, made your copies, and had the copies mailed to the other party or hand delivered to the other party. The reason for that is you will be signing under penalty of perjury that the actions have already been done, and you cannot sign ahead of time. So when completing this form, please note that although some of it may be self-populated with dates, you need to date it on the date that the action is completed, the either personal service or mail, and it will be dated and signed by you. So let's go ahead and take a look at the form. This is our Declaration Re Service of Declaration of Disclosure. This is petitioner or respondent's final disclosure. Now, there is an error on our self-populating forms, and so it does automatically fill out both petitioner and respondent. You can go ahead and just white out the information under number 2 after you've printed this and before you make your copies. This form is completed to the best of your ability until such time as you are actually going to have the paperwork personally served or mailed on the other party, at which point you will check the box for personal service or mail and identify the date that it was served or mailed, and then you will have to redate this form. So just cross out the 1/5 and date it for the date that it was served. That way you have a proper authentication of the service of this paperwork. You are signing under penalty of perjury. The instructions for the mandatory settlement conference do remind you that this process does take place with the delay in the signing and dating of this form. That concludes part 2 of our mandatory settlement conference video series. You may wish to view other videos in this series, which include our introduction, what is a mandatory settlement conference, part 1, which describes the difference between community and separate property, part 3, which goes over the declarations and service of all the mandatory settlement conference documents, and part 4, which is our trial readiness conference documents. Thank you for your kind participation, and we look forward to helping you in the future. If you are able to settle your case or have questions regarding your forms, you can make an appointment for assistance by calling 951-274-4499 or 760-393-2163. Or you can make an appointment online by going to our website at riverside.courts.ca.gov/appointments. Our services are free of charge, but remember, we are unable to provide you with legal advice or strategy. Our jobs are to explain the process, explain the paperwork and the laws associated thereto, and review paperwork for legal sufficiency. Again, thank you for your kind attention.